Hey guys, Angel here with the Bullish Bears team. I am going to make this video on trading weekly options. If you've been paying any sort of attention to our YouTube channel lately, then you've probably seen a lot of uploads about options, whether it's the basic strategies or the advanced strategies. So I'm going to talk about trading weekly options, which is something that I actually do quite often. So what is an option? An option is a contract that gives you the right but not the obligation to buy or sell a stock within a certain time at a specified price. So when you're trading weekly options, you're going to be trading them like either within the same week that you were trading, or you're going to go into the next week depending on when in the week you buy them. And so we're taking a look at Nvidia, which is the Tom Brady of stocks. My favorite, the GOAT of trading, in my opinion, just because there's so many moves that happen that you can make quite a bit of money trading Nvidia. So let's take a look at the options chain. You can see here for next week, if I was going to place a trade on Monday, I would potentially just buy this November 9th, depending on what direction it's going, either a call or a put. And then you can see for the week after, November 16th. And you can see like the difference in prices as opposed to like this coming week and then the week after. So if I bought one options contract, which controls 100 shares, that would be 620 times 100, which would bring it to $620. Or if I believe that the stock is going up to 217.50 by November 16th, and I buy one contract, that would be 1320 times 100, which would be 1,320. Now, options have more than just price movement that make up their profit and loss potential. So things like the time decay, which is also known as theta, can affect how much money you're going to make, as well as the vega, the delta, and the gamma. So delta is with implied volatility. So if it's a high delta, if it moves up $1, then you're probably going to have a pretty good profit potential. So if we are taking a look at Nvidia, and if you're going to trade weekly options, the reason why they're cheaper is because they're a lot more risky. So you have to be right on the money. So that's what differentiates stocks and options, is that a stock, you can hold it forever until it recovers, if it recovers. An option expires, and it's a wasting asset. So the closer and closer it gets to its expiration date, the more money you're giving to the seller with time decay. So if you're going to choose a direction, which obviously you have to when you're buying and calls and puts, you have to make sure that you know your patterns and your technical analysis. So if we're looking at this chart for Nvidia right now, you can actually see right here, it is a double bottom and a potential like cup and handle. And if you had gotten in on this trade here, for me personally, I would have gotten in after it closed above this 50 SMA, because you can see this 50 SMA was a pretty strong resistance level. So if you had got in when you saw that it was going to close above, let's say you got in that day and it was trading at 239 and you bought a weekly option and you held it, you could have held it just overnight. If you had held it just overnight and you sold when it opened, that's 248. So from 238 to 248, that's a $10 move. So with options, that's quite a bit of money. If you had held it for a couple of days, if you had bought it at 238 and held it 1, 2, 3, 4 more days and sold at the top of this candle at 260, 238 to 260, that's quite a great move. But it can also be really, really scary to trade weekly options. Let's be honest. If you are looking in this area here, let's say that you decided to, on this candlestick here, it's like a tweezer bottomish, that's a reversal pattern. So you're like, oh, I'm going to get in, the stock's going to go up. You're just watching it and you're like, yes, it's heading up. So let's say you bought in here at 240. The next day, if you didn't sell right away at 243, you might have thought, oh man, I think it's going to go up more. I just want to wait. And then all of a sudden it's closing down at 236. So you're already down a couple bucks. So not only are you down a couple bucks, you also have that time decay to think about. And then you're like, oh no, I'm going to lose. This is the worst. And then the next day it opens even lower. However, 232, it goes back up to like 242. So you could have then sold there and just made yourself a little bit of a profit. So with trading weekly options, it is a whole lot riskier because you don't give yourself all that time to be correct on the direction of a trade. You have to be right within a week. So knowing technical analysis and knowing patterns are extremely important to trading weekly options. Without it, if it's this messy business down in here, it's going to be a little bit of a scary process for you. Especially, I wouldn't buy in these areas here because you can see all the moving averages are pinching. It's these tiny little doji candlesticks. Everything's all indecisive. And I mean, you could trade iron condors or something like that when it's neutral and they don't need all that price movement. But that's just yucky. So things like that I would sit out. But then if like I've traded these moves up here, and I typically don't even wait till expiration. I get in, I get a profit, I get out. Because if you wait, you're going to give your profit back, especially with options, and then it's not fun, trust me. So it's a really great thing to just take your profits when you have them, and you're going to be swing trading these most likely. So you are going to be holding them overnight. So swing trading is holding overnight up to a couple of weeks. So if you're trading weekly options, you're not going to be holding a couple of weeks. You're going to be in and out within a week. But you can also day trade these weekly options so that you're not paying as much money and you're getting in and out the same day. However, if you hold overnight, it is more risky because you have to be certain on your direction. Otherwise, you could lose the whole trade. Now, that might sound a little scary, but if you practice, then it's not. So if you have Thinkorswim, you can go into their paper trading account and you can trade these weekly options and just see how it feels. And if you like doing it, if it's something that you like to do. When I first started, I was like, options are the worst. And then I actually took the time to learn them. And now I love trading options. It's a great way to grow your account if it's small, or if you have a PDT rule that you have to contend with, or just trading options in general, because you get a lot bigger return on your investment most times than you would trading shares, especially with the big companies. So if you want to read more about trading weekly options for a living, you can go over and head to bullishbears.com, the blog, and read our blog posts on that. And then we have our course over here on options trading, so you can learn more about the different options. Actually, let's click on that and see what it brings us. So we've got the basics, and then you can register as a free member to get the full course, which is pretty cool, because if you go elsewhere, then you're going to end up paying quite a lot of money for these courses. But you can learn the basics, you can learn the difficult stuff, you can learn the options Greeks, and then you can practice it. And it's so much fun when you get into trading options. Me personally, I mean, Nvidia is my favorite stock to trade. And if you've watched any of my videos, you probably realize that by now. I just love all the moves it makes because it goes up quite a bit. When it has a move, you can make quite a lot of money doing that. And you just got to know that weekly options are riskier than having those long expiration dates. If you go out 30 to 60 days, like let's take a look at the options change. So let's say we're going to go out a month. So we're going out to December 7th. So if I believe that this stock is going to go up to $17.50 by December 7th, I'm going to be paying $1,610, but you can see the delta is how much it would move upwards with the stock moving up, as opposed to the theta, which is time decay. So you'd be giving away this much money, is a whole lot more. So you have a lot more of a chance to make money on this trade than potentially this one. And buying calls and puts can be extremely risky because you have to be so certain on a direction. There are other option strategies that limit that risk and where you don't have to be as on point with the direction, but you just have to learn those strategies, and you have to learn the basics. Calls and puts are the very foundation of options trading. Every single strategy is made up of a call or a put. So again, just take our options course and you can read our blog post on trading weekly options. And if you like this video, if you want to learn more, then subscribe to our YouTube channel. We're constantly posting content. You've got me, you've got Lucian, you've got Dan, you've got Matt Elrod, we've got Rose. There's going to be more people coming on board. So it's a really exciting time to be a part of Bullish Bears. And you can, if you like this video, again, like and share, and you can even comment below and we'll get back to you, and follow us on social media. Our social media has gotten really fun, and it's just a great community to be a part of, and we'll see you next time.